welcome back for Bitcoin Technical Analysis. I'm RockyOutcrop. This is one of the 4 videos that I'll be publishing today. I do Chainlink, Tezos, Ethereum, and of course, this one, Bitcoin, every day on the channel. So subscribe for that if you like the sound of that. And of course, we do bonus coins from time to time. Most recent example of that has been VET, where we covered beforehand the 150% potential rise towards the top. When it went up 154%, we checked back in to see where the support levels are. So check that out on the channel as well if you're interested in that. So great, let's take a look at the Bitcoin pricing together. And we can see right now that the price here, this is the 24-hour chart that I have up behind me, by the way, at the moment. And you can see that the price is coming in right now at $9,184 per Bitcoin, and that puts us below the 236 on the Fibonacci retracement we've got drawn in just here, and that's interesting. Let's take a look at that and what was already on the notes from the previous episode. So what were they? We were looking at the inverted head and shoulders. Hey Carl, thanks for watching my videos. That's a shout out to Carl the Moon, who watches my videos, big fan of mine, and he's a great guy as well. I really like him, so there we go. So shout out to Carl. Cheers for tuning in. And that pattern didn't really work out in terms of going the full measured move off of it. Instead, it went up to the top of the pattern before. So if you remember the notes from the previous episode, then you'll remember I was saying top of the patterns to you. And in this one, I've changed over to say bottom of the patterns to you, because there is the chance that we could go on down towards the bottom of this particular pattern and the 2-day ascending triangle type patterns and whatever else. We'll take a look at all of that in more detail in a moment. But yeah. Then we're also maybe going to take a look at where yawn moving averages be at. I had that in the notes previously, but I didn't actually put that moving averages back up on screen. Just forgot about it. And it's about time we did that then today. And you can see the 3 price targets that are down below there. And maybe I should have entered onto this as well, 9,450, because we talked about it an awful lot. But it's not on there as part of that historical record, So hey, you gotta be blowing smoke up your own arse whenever you get the chance in crypto land, as you know from watching YouTube. So if you like, then you can join the Discord. By the way, there's a link down below, and there's a channel in there now because I've rearranged the whole thing, put a bunch more different channels in there for everybody to enjoy. And there's a channel called Arse Smoke. If you want to go ahead and blow smoke up your own arse, that's a great place to do it. And I forgot to do so now I'm having to do the whole Arse Smoke thing here. So that's great. And maybe link this video later in the Discord on that particular channel, because anyway, great. So let's dive on into it then. Thanks so much for tuning in. I really do appreciate people who join every day for the crypto technical analysis. I really do. As you can see, the prices are dropping down still as we're talking. The lows that have been in today, by the way, are 9,118 on this particular chart, and that's just challenging at this upward sloping trend line. So how about we just kind of have the broad overview first off, so that we can build up a picture, and then go down towards the lower time frame so that we can sort of see where things are really going at the minute. And you can see here, this is what I was talking about with the descending triangle, and how after moving this around, we discussed this at the time, and whether or not it was the right idea to move it, and what all the implications of that were. And we did the same over on the Ethereum videos, by the way, which is a little sort of shout out to the Ethereum ones coming in later on. And did I delete them or something? No, we did the same. We moved it. We talked about it there, and you can see it's not working out quite the same. So there's a dynamic there on the go. Be sure to check out that video after this one for more informations on that. And yeah, so we came up towards the top of that, and now we're back at the bottom of the ascending triangle. So you can see in the background here, I have a purple one, and that is an ascending triangle with a statistically more bullish outcome based off of that, and that's encompassing a bigger, broader term amount of time than the foreground one, which is a descending triangle. And the descending triangle, of course, is a more bearish pattern overall. And we've drawn the bottom line of this in here at the 236 on this Fibonacci, which you can see was drawn in from the lows over here on it, like including the wick. You can't see the wick right now because it's behind the. So you see drawn in from the lows over there on the Friday the 13th of March, coming all the way up to the 1st of June here. And then you can see the 236 comes in there right at the bottom of this descending triangle. So I think that really neatly encapsulates the overall price action at the minute. There are other nuances to it, of course. If we look down, for instance, to the 12-hour time frame, you can see that this could easily be a parallel channel in the background, and where that comes in at the minute, the bottom of that can be around about that 9,050 area, which of course we've got marked in here on the low time frames as being an area. Do we? thank goodness, didn't speak too soon there. So yeah, so like that's cool. So, but what else do we have as well? Like building up from the broader pictures. This is the 2 day, like I just left off on before. Oh, is it though? It is. This is the 2 day, and you can see there's this white line sloping down the way in the background as well, and that comes in from the weekly time frame where we have this downward sloping trend line. So if we look in and zoom on in, you can see that there's this kind of theoretical symmetrical triangle on the weekly time frame. It's not that great, being bearing in mind where how this is a lower high than the subsequent weeks coming up in here in the start in the 1st of June and the 8th of June there. But it fits when we look over at the CME chart, so we'll be doing in just a second. And we've come down to the bottom of that, and now during this week we went up towards our serrated line there, didn't quite make it, and have come back down subsequently here. We're still putting in a green week at the minute, and of course we're quite a way into this pattern overall, but this isn't really so valid over. I just want to show though that there will be more volatility in the future, because we have these things like this downward sloping weekly trend line coming in at around about where our 5,200 area, our 5,059. Did I say 5,200? 9,500. I don't know what I said. 9,500 area where that blue serrated line is. And of course, that there'll be lots of different people looking at this for various different reasons. And when a lot of different people have got, like, maybe one person is looking at one thing, another person is looking at a different thing entirely, but then they start to have confluence together, then you can be kind of sure that more people are looking around those areas than have been necessarily in the past. So let's just kind of look at where that comes in at. And you could say that's that 9,500, but we know that the key area on this one is 9,000, really in this 9,770 area that we have written here on the charts, in terms of looking towards the top side, because anything up towards there could be considered to be fake out territory, which brings us neatly over to the CME chart. So here we are in the CMEs, where we could talk about that symmetrical triangle till the cows come home if we wanted to, but just looking up towards the top end of it, we can see that comes in at about 9,850. And if we see the current prices of the CMEs operating at about an $80 premium compared to the prices at the minute on spot, then you could think that around about that 9,850 area could line up neatly with that 9,770 type area that we're looking at before. So that would be towards the top end. And then looking down towards the lower side of this, you're looking at that 8,950 area as well, which ties in quite neatly with what we were looking at in terms of the broader term price perspective, jazzy waz, where really the top end of it is this 9,800, 9,850 area, and moving above that does give you the opportunity to look towards these higher targets, but that'll be a significant area, of course. I'm not a financial advisor, not financial advice, of course. Then down from there, you've got various areas along the way, of course, the 9,850, 9,550, 9,450, blah, 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 blah. And we currently find ourselves below this last one here, the 9,200, and you can be looking down towards that 8,950 area as well. So that between 9,850 and 8,950, we could say there's a sort of solid $1,000 block there where the prices could go to without actually really breaking any of the structure, unless you were to, of course, close significant periods of time below them. So we can move now down towards the lower time frames here and take a look at what could be coming up then in the next wee while, or what sort of areas that we have to be aware of for over the weekend here. So we've got this 236 coming in at 9,196. I think that's fairly key, in terms of creating a valid Fibonacci retracement, looking from the highs up here in the 1st of June down towards the lows that we had quite recently there on the 27th of June. So encompassing that month of June and looking towards a retracement against this downward trend. And if we look towards the key areas, of course, like we say the 9,450 area, which which is in our notes there, the 9,450 area is key, because that's where the 382 is coming in on that Fibonacci retracement, which is right here at the top end of this downward sloping part of the wedge, and having resulted in a somewhat lackluster end of the head and shoulders type event that we maybe had on the charts here, which you can look at again on the 4-hour time frame, check in with it there and see how that was lackluster. But we never made it up as high as the 382 in terms of looking at this Fibonacci, what we've got drawn in from the swing lows on 11th of May up until the 1st of June. So there's two Fibonacci's. Maybe it would be easier to have these ordered out with this on the left here and this one on the right, but that's something I can think of for another episode in the future. Maybe it should be dragged over to the right a bit more so that you can see the lines over the current price action at least. But then it's all confusing again. Whatever, right? So yeah, we made it to the 382 on the Fibonacci retracement here. But in terms of the Fibonacci from retracing up towards this area, we haven't gone back above the 382 on it quite yet, and we haven't even gone up. We were previously up above the 50% area here. We're still like having just come down to the golden pocket and no further. So we could, wow, God, fell over my words there. What I'm trying to say there, sorry, excuse my brain fart there. What I'm trying to say is we came down to the 618 here previously to the golden pockets, and then we've moved back up towards the top side since, having not gone back up to invalidate this one at all yet, which would happen in and around about the median line of this parallel channel, which is in and around about that 9,850 area there. And we didn't actually make it up to the 382 on it either in terms of like undoing it, which is in and around about our serrated line at 9545. Instead, what we managed to achieve in terms of the prices going up was a retracement from the golden pockets is my precious area up to the where is it, the 50% line, and then try to get towards the 382 but didn't quite do it. So we'll put a little Fibonacci on the 4-hour time frame. God, I made it through that in the end. And the 4-hour time frame to take a look at that as well. I am going to take a look at the moving averages as well in this episode, so you can stick with me for that. Just looking at purely at all of this, and then we'll have all the ideas in our head, and then we can stick the moving averages on, and then kind of just briefly look through the time frames to see how they're lining up with everything we've already said. Okie dokie, so then let's go on down to the 4-hour time frame. And I've got a couple of measuring sticks here ready to use. If you're to take this one, measure it up towards the neckline, but then, only do about 60% of it so that you could look at it from the Bulkowski sort of point of view and stick it up here, then you would have maybe hoped to have got up to that 9545 area if this was to actually turn out to be an inverted head and shoulders. By the way, big shout out to Carl who watches these videos on a daily basis. Carl and Moon, thank you so much for tuning in. I really do appreciate the support just as we're making it over 1,000 subscribers. That's so super awesome to have big YouTube names like yourself tuning in to watch the show. So thanks very much for that. And be sure to join the Discord if you want to as well. And so yeah, and then there was this orange line that you could have used for like the sort of the grotesque type movement off the back of it, which is what, of course, crazy folk like Carl, he's a mad badger at times. Was saying it would have gone up to, I think, probably in his episode there, but it didn't happen. And instead, we had this coming in with a bit of the old hidden bearish divergence showing up as part of this upward movement here in and around the neckline, which was not so great. We did have bullish divergence on the go, and the bullish divergence managed to see the prices come up to as high as we say here over the 382, which is what you could maybe expect, having gone up to the 236 here in the yellowy line and passed by it, and then found support on it again. That you could have thought, well, hey, there's a decent target for us, but it didn't actually do anything beyond that. So then came back down again. So that's why it all ended up being a bit meh. And I said then that what we could do at this point here, just to kind of wrap things up in terms of the moving averages segment to the show that we'll be having, is stick a Fibonacci on here, just kind of looking up to where the high came in at. Let's see if I move out of the way. Yeah, okay, that lines up with this high here on the 8th of July, starting off from the 3rd. Just looking at that. Is that right? No, the 27th of June. And then where has the prices come to since? So we've come all the way down past the 236, which we saw happening when the prices retraced down the way here and went past the previous high here. And that actually all sort of cascaded down the way. And we did find a little bit of a foothold in around about where we had previously had a foothold at the 236 Fibonacci retracement point on this one, which is obviously quite significant. That, again, a reminder, that's the June sort of period. And then the 618 on this, if we were to come in and touch this and get another golden pockets is my precious in here, then you'd be looking at it coming down and challenging the lower end of this parallel channel. So that's where that kind of lines up with. And then beyond there, of course, we've got other things like the 618s and the different levels that we have on the go. Let's have a quick brief look then here with the oscillators then for this one. Bearing in mind we had the bearish divergence between these two highs here, just the sort of the straight up regular bearish divergence. We've come down now since wise. We've come down now since wise, fellas, and we've managed to put in a low here. Perhaps, if we were to put in a low here, would there be something positive, extra positive to say about it, such as hidden bullish divergence? And over here in the RSI, you can see that there wouldn't be. And on the stochastics, would there be some hidden potential so-called hidden bullish divergence here if the prices were to turn around? Yes, there could be, but it's a little bit weak on it, and the DMI doesn't seem to have that actually either. So it's a bit. So you'd have 1 out of 3 there if you're looking for the sort of the positive case scenario divergence. But we're experiencing we're sort of experiencing having come up towards a key sort of area in terms of the price action with a bearish divergence run up to it. So yes, now we can stick on the moving averages, what everybody's been waiting for. That's just the 21 there. Let's bring up the settings and make them all visible. So we have the 55 going on as well. So the 21 was the yellow smooth line. Here we have the green smooth line. That's the 55. This is the 144. This is the 233. This is the 50 simple, and this is the 200 simple, with 50 simple being a red dotted line and the 200 simple being a white dotted line. And if we just look towards the inputs, you can get your confirmation for that. And why do I use those numbers? It's because they're just kind of what we're used to using on the channel. It's just preference. It all comes down to personal preference, really, more than anything, because it's all subjective to a degree, and you're looking at similar sort of information, having to interpret it with fuzzy edges. So you can absolutely go ahead and use like 200 instead of 233 if you like. But I use them because they're sort of Fibonacci styly. Anyway, so where are the prices here in the 4-hour time frame? You can see that actually all the Fibonacci, I'm going to start making words farts everywhere. The moving averages here are shaped up in a way where you can see that there's a big downward slope on the 21, quite distinct there, having started on the 9th of July and coming down the way, and it's just crossed over the 144, and it looks like to be heading rapidly towards the 55. So in terms of this lower time frames, if we don't make it back up above the 236 and start challenging to sort of undo this Fibonacci retracement, having come at the 50%, where it would be a good enough area for it to turn around at, be aware, at that 9,150 area, then you could be looking, what was I trying to say there? Yeah, then you'd be looking towards the 21 coming down and crossing over the 55. In terms of this lower time frame thing, that's something you can look to just as an example for, the sort of shorter term trend look. And if we look at where the 55 or the 50 simple moving average is at the minute, that's currently over here underneath the 236, and on this one you can see that we had the death cross over here on the 18th of June, then we came back up on the 24th of June, and it looked like, and I say death cross, but I mean of course 4-hour sort of equivalent. Then it came up here, it looked like they were kissing and they were snogging, they were really getting right into each other there for a second. Get a room, and then they turned around embarrassed and ran away from each other. Oh my goodness, what were we thinking? We should now spend as much time apart as we can. So they're giving each other some space at the minute and a little bit of headroom to think it out. And let's move on up towards the higher time frames and see how things are going. In fact, let's just skip the 12-hour in general. We can look at the 21 EMA, where it's kind of doing the same sort of an effort there. It's below the 55 currently, which is at the same place as the 50 simple. We can let's just skip on past this one for now. Those, of course, where the 21s are coming in at would, of course, be good targets too in terms of managing risk at the minute. Just in terms of 24-hour chart, though, the 1-day chart where the 21 EMA comes in at the minute is 9,250. So again, that's another significant area, and we would know that that could potentially be somewhere where the prices, if they were actually to continue trending down here and filling out this Fibonacci retracement, for instance, that they could retrace back up towards that area, then come down again in the sort of the shaping up to the highs and the lows on that one. If it did go down to the 618, by the way, and looking at this from a daily point of view, then you'd be breaking back down below your previous low over here, and then of course things would be fairly bearish at that point. But from terms of the same sort of thing, to give credit where it's due, coming back up above the sort of the 9250 area and actually challenging at the 21 EMA would be very positive for the prices. Could look to rapidly undo that 236, get past where the sort of the area of the neckline was before in terms of resistance, and be going up above the previous high over here, the previous to the that high at 9250. So there'd be a lot of positive things around those areas. So that's another reason to look for that. And where are the other things? Because we had that golden cross, if you remember, back here on the 20th of May, and I think that it was worthy to remember to remind people that when you get these crosses, that quite often the volatility follows, and you get the sort of the prices moving down to accommodate that and to come down and retest at least one or both of the moving averages. So it's already done the 50 and it's living below the 50 at the minute. And if it were to go down towards the 200 simple, just so you know where that is, that comes in right now in terms of the Fibonacci that we drew on earlier on, just during this episode, in terms of this downward retracement at the 1618 area. So that's how that all ties together. Scooby Dooby, that's quite nice. I feel like that's pretty decent. So we can wrap up the episode now with just a quick shout out to the CME charts, the coronal mass ejections, where the cosmologists do their horoscopes. And if we look to the cosmologist is a Russian word for astrologist, by the way. It's why they call them that. It's the whole cosmologist setup. I'm sharing knowledge bombs with people in every episode, so make sure you hit that subscribe button if you want to have more of these amazing nuggets of gold. And yeah, so just like we were kind of looking at before, 9850 being the top area there, and to look to if you're looking towards the upside, you've got 9345, so that ties up with that new 9250 area where the 21 EMA is. If you're looking at the 50 simple, and that's at the 9420 plays it area, it's obviously above our heads at the minute, and yes, so the previous week's area where the gap was previously seems to have been operating as support. I wonder how the price action will operate if it does need to come down here. Maybe these are a couple of areas of support to look to as well. In general, like the 9050 sort of area that we spoke about on the spot prices in here at 9,080. So yeah, that'll do, I think, for today. Whoop whoop, good episode. Hopefully that integrates really well with what you're looking at. You know, I try not to step on anybody's toes when I'm doing the old technical analysis. So if you find this useful and you've taken some value from it, please go ahead, hit that subscribe button, be a part of the community, join the Discord. It's great in there. It's super cozy. We've got a higgy feeling on the go. And if you looking for a link for that, it's in the description, probably. It'll be in a comment that I post as well and pinned to the top of this video. Check out the suggested cards and all the rest of it. Thanks so much for tuning in. Really do appreciate it. I'll catch you in the next episode. I've been Rocky Outcrop. As always, I really appreciate you tuning in for this daily crypto technical analysis. I may be back over the weekend, but hey, we've got here. Pats on the backs to everybody. Super blown away by that. So thank you so much to everybody. Got to 1,000 subscribers. I can take the weekend off. Catch you next time.